As soon as my check cleared, the company went into the red and never got out. I mean, it was really dumb.
Welcome to Finance Reacts. In this episode, we are going to be highlighting two unique examples in which Warren Buffett, the legendary oracle of Omaha investor, contradicted his own investing principles that so many of us have come to view as the blueprint of sound long-term investing. The reason we are going to be highlighting these examples in this video is, of course, not to discredit Warren Buffett's advice and certainly not to disparage the investments themselves, but to bring some perspective to you, the audience, on how even the most successful investor of all time can make the same mistakes as an amateur investor when it comes to analyzing securities. Let's get started. In the first example, we will be examining Warren's investment in Oracle. One of maybe Warren's most overlooked investments. Warren had originally purchased the stock starting in the third quarter of 2018, but by the end of the fourth quarter of 2018, Berkshire Hathaway had sold its entire stake in Oracle, selling for nearly the same price as the original purchase. For fans of Buffett, who study his career with great interest, we couldn't help but notice how unusually short of an investment holding period this was for Warren, who is known to hold his positions for decades. For some time, speculation was that one of Warren's deputies was the purchaser and seller of Berkshire's Oracle position. Warren put these rumors to an end when he himself addressed the question on why Berkshire sold the Oracle position.
Oracle, that was a stake that you suddenly popped up in the third quarter that Berkshire had $2.1 billion of Oracle shares at the end of the third quarter. It went to zero at the end of the fourth quarter, which it's really unusual to see a technology company creep into the Berkshire holdings like that, and it's even more unusual to see it flushed out so quickly. Was that you?
Yeah, and Larry Ellison's done a fantastic job with Oracle. I mean, I've followed it from the standpoint of reading about it, but I felt I didn't understand the business. Then after I started buying it, I felt I still don't understand the business. I actually changed my mind in terms of understanding it, not in terms of evaluating it. I mean, Oracle is a great business, but I don't think, particularly after my experience with IBM, I don't think I understand exactly where the cloud is going. I've been amazed at what Amazon has done there, and now Microsoft is doing as well. So I just don't know where I don't know where that game is going.
As we can see, Warren cites his past experience with IBM, a Berkshire investment that turned out to be relatively unsuccessful, as a reference point as to why he no longer felt confident in his opinion of Oracle. This purchase violates one of Buffett's cardinal rules of investing: invest only in business you understand. After giving some much added thought to the investment, Warren realized after purchasing the company's stock, he had no fundamental understanding of Oracle's cloud and operating systems business, which gave him no confidence on predicting the future of the business 10 years from now. A rare trigger-happy mistake for the investor who was known to take his time and wait for the perfect pitch.
The trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, "Swing, you bum," ignore them.
The second example we are going to examine caught much more scrutiny in mainstream investing circles: Warren's stock purchase of the major airlines. Warren historically has expressed nothing but negative views on the airline business.
I went into U.S. Air. I bought a preferred stock in 1989. As soon as my check cleared, the company went into the red and never got out. I mean, it was really dumb. I mean, I've got an 800 number I call now whenever I think about buying an airline stock. I call them up any hour that, fortunately, I can call them at 3 in the morning, and I just dial and I say, "My name's Warren, I'm an aeroholic, and I'm thinking about buying this thing," and then they talk me down. I mean, it takes hours sometimes, but it's worth it, believe me. If you ever think about that buying an airline stock, call me and I'll give you the 800 number, because you don't want to do it.
So Buffett admirers were quite surprised, if not shocked, to find Buffett had purchased a stake in 3 major airlines in 2016. Buffett rationalized these purchases by explaining the economics of the airline business had changed dramatically, and the valuations in the industry represented significant upside. Many parallels were drawn between his investments in the airline industry and the transformation the railroad industry had underwent with precision timing, invented by late CEO and railroad legend Hunter Harrison. Perhaps a more pragmatic explanation can be given by Warren's partner, Charlie Munger, who in the 2017 Daily Journal meeting gave his analysis on the investment.
I don't regard it as a perfect model, and I don't think it's the greatest idea we ever had. It's just something that, considering how pounded they were and how the world has changed a little, we thought, as I say, we had a little advantage by that particular gamble. But it is not that it's not a cinch.
4 years later, Berkshire had sold out its entire position in the airline business. Now, we all know the catalyst of this reason was COVID. The lack of travel drove airlines' revenue down to nearly zero and put tremendous pressure on the big four airlines to raise more capital and take on debt. However, we can point to many times in Warren's career in which a crisis in the respective businesses industry took place, and Warren never flinched. Just some examples of this would be the 2008 financial crisis impact on Wells Fargo stock, the negative economic downturns of the packaged goods industry after the Kraft Heinz acquisition, and even Warren's willingness to hold on to Berkshire's stake in the newspaper business until 2020, long after the trajectory of the print industry became apparent. I would argue Warren sold during the time of crisis, not because the economics of the business had fundamentally changed. Any recession in an industry will cause a serious setback to the fundamentals of a company, but instead, Warren came to the realization that the economics in the business were poor in the first place. Sure, operations had become a bit more profitable by having better data points in pricing offers and heightened focus on overhead cost cutting, but the airline business was still a heavily regulated, capital-intensive, low-return economic proposition. This is why I believe when Warren re-examined the value proposition of the companies, he realized the mistake lied in the original investment itself and decided to sell off the position. Any business that's economic moat couldn't withstand a multi-year downturn without coming back as strong, did not reconcile with the lessons Buffett himself has taught investors for generations. These two examples are quick highlights, show even Warren Buffett can sometimes ignore his own advice and jump into an investment without taking into consideration the same principles and concepts that he has helped so many understand over the years. Have you ever sold a security shortly after its initial purchase due to similar reasons? Leave a comment below explaining the reason behind your decision. Also, please hit the like and subscribe button. It really helps the channel and allows me to continue making original finance content.